welcome back to Forex Predator, where we're discussing the most powerful FX chart patterns. So these are the 13 most powerful FX chart patterns which we are going to be going through. They do form part of the FX Predator course, so if you haven't got that and you're new to Forex, have a look at the FX Predator course. It's a free course. It's about 3 hours long. I give a free report. There's an email series and a 3-hour video course going over these patterns. These are some of the patterns which we've covered so far. We've covered the ascending triangle, descending triangle, double top, double bottom, and we are now going to go over flags. So these aren't the only patterns in the FX market, but they are some of the most important. So flags are short-term patterns that can last from 1 to 12 bars. There is some debate on the time frame, and some consider 8 bars to be pushing the limits for a reliable pattern. Ideally, these patterns will form between 1 and 4 bars. So the flag pattern forms what looks like a rectangle. The rectangle is formed by 2 parallel trend lines that act as support and resistance for the price until the price breaks out. In general, the flag will not be perfectly flat, but will have its trend line sloping. So if we have a look what actually happens here to further analyze this chart, you can clearly see that the FX pair that we're looking at was in a trend, and basically it failed to make higher highs. It then came down, it broke this previous resistance, and once again it was pushed up. So that's in essence what a flag is. As you can see here, this chart from forexcycle.com, I've just taken this chart from their site. I hope the guys don't mind there. But basically you can see flags occur in uptrends and downtrends. The main thing is with all these patterns, it takes a good while before you can, call them out. So basically in a downtrend, whenever the flag fails to break through resistance, it then will form, it will break down and form a new support, will break down, and this is how the pattern continues. And if you've seen the other videos, what you can actually see forming here is a double bottom or triple bottom. The reason I say double is that this bottom here didn't quite come down to the same level, but some people might say that this is a triple bottom. So the Great British Pound came down, bounced off the bottom, then it rallied against the dollar, it then was weakened, rallied, sold, and then rallied back up. And that basically brings us to the end of the flags example. I have further slides of each one of these patterns where we really discuss them in detail. In the future, I plan on releasing them. They should run about 10 to 15 minutes explaining each one of these patterns. So I hope you've enjoyed this. And if you have any questions, don't forget you can always email me.